Good afternoon, everybody, and welcome to this edition of Live Market Analysis, ASX. My name is Carl Coupling. I'm the market analyst over here at ThinkMarkets Australia. It's a pleasure to be joining with you as we look at everything on the ASX shares and ETFs and try and find the best stocks for your portfolio. The agenda for today is pretty simple. Find the Q&A window somewhere on Zoom, or if you're watching me on any of the streaming channels which are working this week, thank goodness, you should find a panel there where you can enter your requests as well. I'll give you my best technical and fundamental reader. Let's head over to the AMI Broker chart, and I do have a scan list. If you tuned into Friday, I showed you how I run a scan and then shortlist and shortlist and shortlist. So maybe we can get onto that later. But going to go first to a request from Tanya for DUR. So let's head over there, check that one out. Still looks very good. I know in the past we've had some positive things to say about this one. I don't think we need to, it still looks as good as last time I expect, and we had a minus 1/3 there if it closed beneath a particular level. It hasn't done that, and we're still holding. There's nothing in the charts or the candles more specifically to suggest we need to do anything but hold. If you don't have risk, it looks like we've done plus 1/3 in the past. Assuming today's candle closes as good as it is, and don't forget today's candle is a live candle. Okay, so you can see it's at the moment, it's a nice white candle here. Opened at the low, closing so far at the high, then I'd be happy to add some more risk on this one. Can't see any reason why not to. And just remember, of course, that that candle can change by 4 o'clock. So if it ends up being one that has a big shadow, then that would negate my suggestion. Okay, so if it closes, and I'll give you a number, at, let's call it 91 or better, and within close proximity of whatever the high might be, happy to go on that one. I'm not sure if we did this one for you last time, Tanya, but let's have a quick look. I'm not sure if I'm going to get a lot of information here for DUR. Don't think it's widely covered by the brokers, and in fact it isn't, but that's a quick intro to the Refinitiv Icon spreadsheet, which in theory could give us consensus estimates from the big brokers on various financial metrics. There's no broker coverage, you can see up here, and also we get the historical data to see what's already in the bag. We'll come back to that, no doubt, before the end of this presentation. Let's head back then to the charts, get on to the next request, which is from John for STX strike. Which looks up, we'll have to get out of that list because that is the scan list. So funnily enough, strike not coming up on the scan list today. So if I head over here to the master list and go STX, you can see why strike hasn't come up on my list today, but it's been coming up on my list for the last couple of weeks because of this amazing candle here, this one here, this one here, this one here, and this one here. If you're looking for or wondering what to look for, what I look for in a chart, very much strike on this day here. So you can see not totally different from Duratec in that, it was consolidating beneath a point of supply here at 40, and that nice big white candle there, just coming off that green zone, very important, followed up the next day, a pretty good candle, no complaints about that one. And then even better there, 50 is where we are now. There's no surprise at all that we've hit 50 and we've found some supply. Okay, 50 is one of my round numbers, 50, and then $1 would be the next one up. I don't think we're going to concern ourselves too much with 60, 70, or 80 cents because I don't think there are holders out there going, I just really want strike to hit 60 cents, or I really want strike to hit 70 cents. But certainly for long-suffering strike holders, and maybe, John, you're one of them, you would have had big dreams for many years with strike around 20, 25 cents of it hitting 50 probably. Not everybody's going to think like that, but some of them will, and it will create a point of supply up here. And now we need to deal with that supply. Supply is not a bad thing. Okay, we need to see how the market deals with the supply. So we've got some profit taking. That will create a little bit more profit taking. I missed the top. I better get out before it gets any worse. I know how bad strike is. I've suffered with it for many, many years. Let's just see how we go from here. So this black candle, obviously, if it closes there, is not great. It would indicate another black candle is in the offing, and then see how that one goes. Does it close near the low? Then probably you're going to get a pullback into this light green zone. We want to see how the candles respond there, and if we see not the black candles, but in fact the white-bodied candles, something that looks like that, okay, or its best buddy, which looks like this, and one is not better than the other. They are both very, very strong. We call them demand side candles, or our demand buddies. If we see the demand buddies in the light green zone, where's the light green zone? Somewhere around there. It could even come in a little bit higher. Then I would happily add some risk, given a nice big long lower shadow or a nice big white body. Other than that, you're probably waiting for it then to put in the right price action again, and this could take a little while, come back up, and we've got to do some work here testing 50. But there's a good chance next time we get through 50, we can probably go on with it. Buy, hold, or sell on this. Look, if you are jittery, I think this candle, if it closes as bad as it is right now, if it closes there, then I do think it does. And with the 50 cents, I mean, the 50 cents, you could have just done this because of that round number. Let me change that color because it's not all that easy to see. So minus 1/3 in here. But if you have it, then I think that candle allows you to do it. And this is by no means telling you that it's the second minus 1/3, but if the candle closes, and I'll give you a level there. Sorry, in fact, I was already on it. So 46 or worse, then minus 1/3, and then you're looking for what happens in here for a buy somewhere down the track. Got to do very quickly, just because it's I know it's super popular. John's second pick there, which is CSL, trading in the range. Does this mean with these last bunch of candles that we're coming back to the bottom of the range again? Look, they're not so terrible that I think it warrants us managing our risk at this stage, that is managing an exit. This candle is very important. So you can see this huge white candle, that is the epitome of demand. Actually came on slightly elevated volume as well, so it did remove some supply. I would say as long as we stay above that candle's low, then we're probably okay, and just watch it. So we might even see a bit of a rally somewhere in this, let's call it green zone again. Green zone where I'm looking for demand to come back in. And if you were to see the right candles, the demand side candles in there, then I think you're probably fine. And I don't know if I'd add risk there, but certainly confirming that you can hold it. The only reason why I'm saying maybe not adding some risk here is that, we've got overhead supply not that far away, and that's the ongoing problem with CSL. So I think this is just a pullback. Otherwise, you can see here the price action is still very good. In terms of peaks and troughs through here, the candles are predominantly white. The short-term trend is up and the long-term trend is up. And again, that short-term trend will catch up with where I've drawn that green box. So happy to hold that one. No reason to exit that one just yet. Might head over here because it gives me a chance to have a look at the spreadsheet and what it does. So let's type in CSL. If you've got any questions, queries, or any technical difficulties with today's presentation, definitely get in touch with Nick. He is online in the Zoom session, and he has the ability to unmute and shout at me to let me know that I might not have changed a screen or something like that. Okay, CSL, we definitely have broker coverage here, widely covered as far as an Aussie stock. 15 brokers is one of the highest, most covered stocks, I would say, on the ASX. Their broker, their consensus target is 334.52, which if you look down here allows about 10.8% upside from the last price of 301.86. The high price there 364 and low price 248, so pretty big spread. In terms of the rating, it is a buy with 3 strong buys, 12 buys, 1 hold, and just the 1 sell. Looking at the EPS line, we want to see bottom left, top right. So we want to see steady, consistent earnings growth through thick and thin, and we've had plenty of thick and thin in terms of a pandemic, in terms of supply chain shortages, in terms of rising interest rates and inflation. So the EPS line there looking pretty darn good, actually. In fact, just the problems there in 2022, but looking to resume that very solid growth into the future. The broker consensus compound annual growth rate is 22% for the next 3 years, which is super impressive, especially considering, the average market return annually is about 8% or 9%. So much better than the market return, but you pay much higher than the market PE for it. So the current market PE is about 14.8 on average, long-term average is around 15. So you can see there's no free lunch in the market. You've got higher than market growth. The market PE, or the PE, the price earnings ratio is going to be higher. And is 27.2 a fair representation of value for CSL. And for that, we look at what CSL or what investors have paid for CSL in the past. And you can see where I've highlighted there in 2018, the PE was 53. 2019, it was 48, 44, 38. It's been coming down, actually up there in 42, just showing that CSL really didn't come down, even though the earnings came down. It just goes to show that, the big research houses are prepared to back this one through thick and thin. And you often get a premium in a stock like CSL just because of the quality that's there. Okay, the price target here is looking pretty favourable. Is 27.2 reasonable in terms of the 5-year historical average? I think it is very reasonable. Is it reasonable for a company that's delivering 22% growth? I think it is very reasonable. So I can't see any reason to muck around with that. And therefore, my fair value target's closer to 350, but not all that dissimilar from the brokers there at 334. Saying that, at the very least, I don't think CSL is expensive. There are no red flags in terms of my view of the valuation to prevent me, if I wanted, from running out and buying CSL. Okay, let's keep moving. And we've got next coming up here is Reliance Worldwide, RWC, and this one's for William. It looks okay. Yeah, look, no complaints here. It's starting to turn the corner. This is more of a turnaround stock. We know that when something is in a big downtrend, that long-term downtrend zone will impede its upwards price action. And it certainly did it then. It certainly did it there. It certainly did it there. But stocks don't go down forever. Downtrends don't last forever. Downtrends turn into uptrends at some stage. And the way that occurs is by dealing with the dynamic supply at that long-term trend zone. And this one looks to have done it, and done it quite impressively, actually. So I really, really like to see these candles here, that one there and that one there in particular. And I wonder if that candle closed above this point of supply here. So here's the point of supply that I'm interested in. Okay, and the high on that day is 374. Okay, so 374. So looking across there, didn't quite get it. Okay, 374. Yeah, so you can see how supply works, actually. If you look at just in here, you can see the pause there, how the market dealt with that supply. I mean, you hear me week in, week out talk about point of supply. And you kind of think, well, why? Why would that be an issue in the market? It's just a place on a chart. It's just a candlestick. But you can see for 3 days, effectively, it stopped here on this day. As strong as that move was, it paused at that point of supply. Supply hit the market from here, then 2 days to get through it. And the only way to trade with supply is to, the only way to deal with the point of supply is to trade with the supply that's there. So if you can imagine that point of supply starts out, it could be this big, there could be this many sellers, okay? And once you deal with it, you interact with that area, you take away some of the selling on the first day, then you take away some of the selling on the second day, and then you take away some of the selling on the third day. And on the fourth day, there was so little supply there that we were actually able to crack through. Interesting to see that we often come back and we test. You can see that day tested that point of supply, and we found on this day here and this day here that both occasions that point of supply stopped acting as a point of supply, started to act as a point of demand, and you'll see that time and time again. I'm pretty happy with this. I don't see anything in there that's really sinister at this stage. Today's candle is good. So drawing in the peaks and troughs. That's an inside candle, skip that one. We are coming down a little bit today in a short-term downtrend, because today's candle's high is lower than the previous session's high, and today's candle's low is lower than the previous session's low. So that is the definition of a short-term downtrend. So short-term downtrend equals lower highs and lower lows. Short-term uptrend equals higher highs and higher lows. Okay, point of demand equals lowest point between short-term downtrend and short-term uptrend, and a point of supply equals highest point between short-term uptrend now and short-term downtrend. And these definitions, it doesn't matter who's applying them or what stock they're applying them on, they are 100% black and white, unequivocal. Once I teach you these, everybody can draw in these peaks and troughs on a chart. So the key here is that good price action looks like this. You're going to get little periods of supply. That's not a bad thing. You know, supply in an uptrend is not a bad thing. There's supply in there, excess supply, right? Excess supply. If you don't believe me, it's the only way price will go down is if there's excess supply. But then we have periods here of excess demand. And I think if you look at a trend in this way, it starts to make sense why I like to see good price action, because you can see the periods of excess demand, they last longer and they progress the price much further. The periods of excess supply are shorter and they progress the price as far. So this is good price action. It is a market that is very clear on what it thinks about a particular stock. And both the demand side and the supply side are quite clear. There's limited supply and substantial demand. Think about that. Just say those words: limited supply, substantial demand. Okay, this is a good company. Now, did I need to go do all the research and the valuation and talk to 15 brokers to figure that out? No, I didn't. There's limited supply and substantial demand. It is a good company. If the price action looks like this, it's far less clear as to whether this is, you know, and when we start to do this part, this side, surely you can also then see how this is not good price action when we get through here. Now, this is indecisive. This is a market that cannot decide. You know, the periods of excess demand and supply are very similar. Okay, so we say that this is not good price action. We say that this is fantastic price action. And really comes down to what you want to find for the companies you want to invest in. Really, it's your choice. I think this is fine. I can't see anything in there that would dissuade me from looking at this on the basis of adding risk. This is good. This is good. And it's just whether I wanted to add some risk today. And let's say it closes at or above the current close there. It's 395. I know this is a live price. And in fact, at 20 past the hour, which is now I get another update. There or better, I can't see any reason why you couldn't add some risk. If you're a bit more conservative, oh, look at that, it even got better. Yeah, look, I'm going to say plus 1/3. I can't see any reason why you wouldn't add a third. And we are just dipping a toe in the water at this stage. To be fair, there were other plus 1/3 before that, but I think I'm happy to go there. In terms of where the supply might be next, and this comes back to our reward to risk, I think it's miles away, so I think we're fine. I don't think we've got too much to worry about. So, you know, getting a stop probably underneath that point of demand with a target up towards 460, I think starting to look like a good trade. And there's a reason why we only do the plus 1/3 at a time, and that's because of this. Remember this one? You know, this is why we just dip a toe in the water. We don't just jump straight in, head first into the market. We just put a little bit of risk. And we see how that goes. And if the stock continues to perform well, if it continues to exhibit signs of excess demand and diminished supply, then we continue to add our risk. Okay, let's go to, actually, we could probably have a super quick look at this one on the valuation spreadsheet, RWC. And we are going to get broker coverage here, no doubt. Retrieving. Come on. You can do it. Not working out for me, is it? I'm not sure why that's gone so slow all of a sudden. I hate dead air in these sessions because I can see how many requests I have. You can't. So I like to keep moving. Let's come back to that one. Let's head back here and let's look at the next one, which is New Hope Corporation or Craig NHC this time. I'm concerned. Well, look, I mean, if you look at the previous scratchings we have, there's minus 1/3, minus 1/3, all out, exclamation mark. And, you know, happy to admit, or no shame on my part in admitting that if you got all out on that day, you would have been quite disappointed. You would have got out at 480 and it hit $6 not that long after, probably cursing my name. And I can live with that. I'm okay with it. because all I'm doing and all I can ever do is make a call based upon what I can see on the screen, and I don't know the future. Okay, and I would suggest to you that around that time, it was a hashtag banking crisis. It was the end of the world. Commodity stocks were plummeting, and the coal price was at its doldrums. And I would say every day of the week that if you see a setup like that with a big black candle breaking through the long-term trend zone, it's time to be all out. So no apologies for that. I can't know what's going to happen next. Assuming this wasn't a dividend, and here's your work now, Craig. I'm asking you, please make sure this wasn't, I don't think it was, but Craig, confirm for me that's not a dividend right there. So this drop here is not a dividend, please, Craig. Go and look it up and let me know. Assuming that's not a dividend, this is a very, very bearish signal in the market, that big drop there. So not only are we moving back into from high peaks and high troughs, in fact, if you look at it here, I reckon we looked at it on this day here and we said if it moved back into positive price action, we might consider adding some risk. But I would say this is the price action now, and with that big gap down, that's very bearish, and we might even get a little bit of a rally back into that gap. But I do feel that we're going to see more supply. The drop is the dividend. There you go from King. Okay, well then there's not really much else to do on this one, because given it is the dividend, according to King, that is not a supply demand event, that is a capital event. So what you need to do is take this candle, right, and shift it up here by the amount of the dividend. I don't know what the dividend is off the top of my head, and take that obviously and shift it up next to it. It's got next dividend. Okay, so it's okay then, it's fine. I would still say though, if it closes beneath that candle there, and I'll give you a number, it will be moving back into lower points of supply and lower points of demand. That low there is 551. And that's why when you see these big gaps, as soon as I see them as a technical analyst, the first thing I say is go and check if it's a dividend. Okay, don't jump to conclusions that it's a demand supply event. Okay, so as I said, on a close beneath 551, then let me just remove those. All right, we know they're going up by the amount of the dividend, and I'm going to go less than 5.51 equals minus 1/3. Okay, so looking again to manage exits if it closes beneath that low. Whilst it's staying above that low, the price action is okay, and I will show that to you exactly how I would draw that in. That's an inside candle, so we ignore it. Come up here, and that's it there. So if we look at the price action, you can see that this last trough, okay, is at or about above the second from last peak, so that's okay. So here's your last point of demand. Here's your point of supply. Okay, here's your second from last point of supply. And we see that last point of demand is at or above the second from last point of supply. So the price action is good. The candles are okay, not great. I mean, certainly this candle here is good. This candle here is good, but now we've got three black ones. And again, adding this back in up here and this back in up here, I can say with confidence that beneath 551, you will have formed a lower point of supply if that occurs, if we close beneath that level. And we won't know where the next point of demand is, but if we have closed beneath 551, then I can guarantee that point of demand will be lower, and therefore we would have moved from this price action into this price action, and therefore it would require, based upon my system, a managing of the exit through there. Okay, that's the stylized version. Okay, I don't think I can be any more specific than that. Thank you, King, for confirming that there's a dividend there. He says it's 40 cents. I'm guessing fully franked. Okay, so 40 cents fully franked. If we look at the drop, that close there is 570, and then we open the next day or close the next day at 525. So what's that? 45 cents. It's about almost exactly the dividend plus the franking credits. Makes sense. Okay, let's head over here and see if we've got the Reliance Worldwide data. Unfortunately, we don't. And sometimes I can fix this by just putting in something big like BHP, and you can see, no, we've got a server error here. And without restarting my computer, I don't think this one's going to come back for us. I will try and restart Excel. I don't think that's going to make any difference. But we may be running on charts only today, ladies and gentlemen. Apologies. Okay, let's go to XRF for Daniel. XRF, there we go. Oh, bang. Okay, well, that's great. If you had it, I know we have talked, oh, look at that, minus 1/3. That would have annoyed you. But again, the good news is that we're still plus 2/3 here. And this is why we don't get all out either. I don't have a little meme for the not getting out all at once. Maybe you can think of a meme and send it to me. Much like we don't get in all at once because maybe the shark's beneath the surface, especially in those turnaround plays. We don't get out all at once. And there you go. So is this candle the exit candle? I think is what Daniel's probably wondering. And let me say, Daniel, if it closes where it is now, okay, then for me, yes, that candle is enough to go minus 1/3. In fact, for me, that candle is so severe, okay? So we, think about what's happening. We have this great move, obviously some news. I mean, look at the volume coming in and it's demand, it's demand, it's demand. It's really unrequited demand. It's demand that's not fighting supply. So I'm talking about this candle here, this candle here, this candle here. It really is just all demand. And that's fine. You can keep going on that basis of white candle, high close, high close. But when you see this candle here, it's telling you, there it is. We found the supply. Now, are they supplying for just because it's a pullback, or are they supplying because it is a massive fund manager who got in at 50 cents, who is now taking profit because we're getting close to June 30 and they have a few losses they need to pay for this year and they want to report some really good performance. And they intended to sell for the next 6 weeks because they've got so many, it's going to take them that long to get out. And what it does is it precipitates more supply. We get stuff that looks like this, and then that's the end of the trend. And you'll never see XRF trade higher than that again. Okay. Hey, I don't know. I'm just saying it could be just somebody who's taking a little bit of profit off the table. Point is, we don't know, and we're not going to ask too many questions. We have found supply. So that's why we say we're going to get some out. And remember the model is not, because the trend is still great. This is still fantastic. This is still fantastic. We're going to hold some. Look, if you had only 2/3 left, I don't think you're going to do 2/3 here. You'd do a third, keep a third. If you are holding a full position, if that candle closes then, this is a live candle. Again, I can't see the future. I don't know where it's going to close, but at the moment, the close is 128, 125. There's been a bid there and there's been a crossing in between, okay? So let's say closing at 128 or worse, then you might seriously consider doubling that and going minus 2/3, because I don't like that candle. Think about what that candle means. That candle started its life this morning looking like this. Okay, it started its morning looking like this. And the only way you can get from that, okay, it was another big white candle where we opened down here. Okay, there was basically, well, I can't tell if there was the open because it might have happened more recently. There's a tiny little shadow there. It's probably even 1/4 of a cent, if anything. But let's say, for argument's sake, that it opened and there was just, well, I can't say there wasn't any supply. There's always supply around, but just overwhelming excess demand. We opened and it didn't go any lower. Think about what that means. Now, this has gone up. It had gone up from $1 to $1.30 in just a few days. And yet on the open, it's opened higher, and yet there's just a lack of supply, complete supply vacuum, and all you can see is demand. Think about how bullish that is, right? It is just so bullish. And then up we go, up we go, up we go. We're going higher. We were $1 a few days ago. Now we're moving to 135. Now we're moving to 140, all right? Just above 140. Powering. The demand is overwhelming and there is no supply in sight. But, okay, let's say let's fast forward to 10:30 a.m. Okay, and what's the candle started to do? Now there's a little upper shadow there. Why? Because there's some excess supply up here. We found supply. excess supply. It's the only way you can build that shadow is if supply is starting to come to the market to overwhelm demand, and or demand is pulling back. That's the other factor. The demand side will not sustain prices above that level because the demand side is starting to think, oh, that's a bit expensive. So the supply side is starting to think this is a good price for me. Yep, and here we are now at midday, looking at something like this. Okay, where's the demand at? The demand's running away. Supply, who has been waiting to take profits, is getting more and more jittery and more active in the market until we end up in a situation where, in fact, we come all the way back down. And now this candle, that body has turned black. Okay, what is it telling you about supply and how it's changing? Look, obviously, I don't mean to spend all my day talking about XRF. That's not the goal. It's just showing you some really important technical patterns there as well. And what you can't see is I've restarted this over here, and I'm hoping that we get it back, but I don't think so. Oh, maybe we did. Okay, so we're going to go to, I think we're going to New Hope first, weren't we? Maybe it was even RWC. Well, it's working. Fingers crossed it stays that way. New Hope, 6 broker estimates. How about that? And let me make sure that's the right month. We can see that their average target is 646, which allows 23% upside from the current market price. In terms of the ratings, we're at a hold here. That's interesting. 2 buys, 3 holds, 1 sell. A little bit less certain. In terms of the EPS line, we can see just what an impact the sudden rise in the coal price has had on New Hope's earnings. 30 cents, 30 cents, 10 cents, 20 cents, $1.07, $1.38. But with the drop in coal prices going forward, we're not going to get that growth again. 103, 103, and 90. So that we are growing our earnings over the next 3 years. In fact, those earnings are expected to contract by 13%. Does that mean we can't buy New Hope? Well, it's not a great sign. But if we can get it at a ridiculously low PE, it should compensate us for the fact that those earnings are expected to contract. What is a ridiculously low PE? 5.1, let me tell you, is a ridiculously low PE. It's trading at an enterprise value of 1.3 to 4, in that its revenue is only 30% more than its entire enterprise value. So this explains this, okay? Explains this. And it's hard to pick the appropriate PE here because we've got such huge extremes. In the past, brokers have been comfortable paying over 26 times earnings, 52 times earnings. This all becomes a bit nonsensical. It's hard for me to find a number. It's hard for me to put a valuation on it. Look, let's just say that the spreadsheet doesn't do as well when trying to understand these types of opportunities. But let's say I used a 3.8, which is the current, like not trying to figure too much out about the world, and just say 3.8. Actually, that would make it worse, wouldn't it? I need to maybe go out here, 5.8. It's not going to get any better, is it? 5.8. It's still going to say overvalued. I think defer to the brokers here, if you could call it wisdom, and say that the spreadsheet is struggling a little bit with this one. I don't think you want to go to any of these historical values because I don't think they're relevant anymore. Because if I go historical on this, you're going to see this become crazy cheap. It's just not relevant. What is it? Is it 10? Do I go low growth? And that goes to 10. See, I just don't know. So not a great one for the spreadsheet there. Let's keep moving. And I'm not saying the spreadsheet's perfect. I never have. But you can see the extreme circumstances in New Hope. And it's reflected in the chart, isn't it? Investors that are committing and investors that are just going, I'm a bit skeptical about that one. Reliance, plenty of brokers here. I'm surprised. I think that must be a typo. 17 brokers covering Reliance? No way. Anyway, for what it's worth, 406 is the average target. 10 buys, 5 holds. That's amazing. 1 strong sell. That's even weirder that you've got this one outlier here. In terms of the EPS line, is it bottom left, top right? Look, it's not bad. Obviously, the pandemic has had a bit of an impact here. Looking forward, it's not that great either. It's a bit wobbly, isn't it? 5% earnings growth isn't terrible at all, but we should be getting compensated for that lower growth with a lower PE, and it is a little bit lower than the market, I guess, 13.7 versus the typical average about 15. So given that, in fact, if I get this right here, sorry about that, it actually comes up to 6% growth, a little bit better. And it does mean that I think we're about fairly valued here. So yeah, a little bit less than the market growth with a slightly lower PE means that spreadsheet's going to say you're about fairly valued, and we're not that far off from when the brokers are. So I don't think there's any red flags there, William, in terms of buying Reliance. And for you on I can't remember who asked me about you. Hope that was Craig. I don't really have a definitive answer, and then we'll go to XRF finally here and have a look very quickly to see what this one's about. If we have any broker coverage, we do have one broker. I'm not going to spend any more time on that. The broker, it's a little bit over broker target, but my spreadsheet says that given the expected growth of about market growth, that's looking about fair value compared to historical PEs. It looks about fair value. Okay, let's go back to here and keep moving down my list. SGP for King. And I might try and pick up the pace here because I can see just how many I've got to get to today. Let me zoom out to the normal range so I can get some perspective. Because if I just looked at it the way it was, I would straight out say add some risk. It looks amazing. But when I zoom out, I can see, well, we are coming up to a bit of a supply zone here, and we're probably interacting with it already. And let me do that. So I like to make my supply zones red just for consistency. And if I zoom back out, we've probably got one up here as well, around 480. It's a very good chart. I like this. I like this. The price action you can see is starting to overlap a little, and there's a very good reason for that. In here, we are in here, we are in here, 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 and then we pop, and we go here, 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 and here. So you can see just how good this stretch was here. We hit a little bit of a pocket of supply in here at this old point of supply. No surprise. It's doing everything I would expect, and that's good news. When things don't do what I expect, that's when I get a bit concerned. So you can see how the price action is compressing into that supply zone. Okay, that's okay. That's not a bad thing. We can forgive it that because we're interacting with that supply, we're dealing with that supply, we're getting through the supply, and we're doing it with some good candles in here, here, and here. Not all that happy with that candle there, and not happy with today's candle. But I could give this a very warm sort of 7 out of 10. Would I add risk today? I don't think so. And I think I'm just going to wait and see how we deal with that point of supply. But if you've got it, I can say it's an absolute hold. I can't see any reason why you wouldn't continue to hold that one. I'm just not ready to buy it yet. Maybe there was a buy down here closer to the green zone. But to be fair, I didn't see a candle that really knocked me out down there either. Let us keep moving then. I don't want to get too bogged down on this, I know. So if you're interested, it's something we were maybe, I'll go here on the ones we might think about buying. Stockland, 11 buyers, a little bit over broker target, 1 strong buy, 6 buys, 2 holds, 3 sells, very polarizing. EPS line, lumpy and flat. And that is a bit of an issue, isn't it? So we've got very, very flat earnings, and you're still paying, 13 times earnings. So that's why my spreadsheet's saying with no growth and still paying 13 times, it is not something that the spreadsheet likes at all. And that might be a red flag for you on Stockland. Very interesting, isn't it, to see how those technicals match up with the valuation. Anonymous says, GPT chat says, you're a stand-up comic from Perth. Oh, wow. I need to check that out. Yes, in many ways. I am in many ways. Hey, if you listen to me on Tuesdays, boom, boom, the laughs keep rolling. So I don't think that's inaccurate. ILU, Iluka Resources for Shireen. I did, and you could go do this, ask ChatGPT, and when it came out, I went and signed up, and the first thing I asked it, I said, look, what are the 2 most important Japanese candlestick patterns? And it gave me some waffle about, generic Japanese candlesticks that you get if you Google it on the internet, Investopedia. And it did not know the 2 most important Japanese candlestick patterns. And I'm not going to tell it what they are, but you all know what the 2 most important Japanese candlestick patterns are, yet ChatGPT doesn't know them yet. And I think when ChatGPT learns them, I will hang up my boots as a technical analyst because you won't need me. But anyway, until then, I'm in the clear. Okay, so this price action is good. Once again, I mean, I don't know. Are you all bored, mate? You all must be bored of me by now because look at that. We're approaching that point of supply and we're losing steam, aren't we? We're starting to interact with it. This is fine. No complaints at all. This is good through here. This is good through here. The fact that we've got above this point of supply or area of supply through here is wonderful. The price action's great. The candles, there's nothing so sinister in the candles that would warrant me selling or taking any profits at this stage. No, it's just got one big glaring problem, and that is this big juicy point of supply up here. And I think we're starting to just feel the pressure of that supply at this point in time. Certainly a hold here. I can go hold. It's not a sell. I can't see any reason to sell it, but I can't go buy for obvious reasons. Okay. Let us keep moving. Then Shireen asking, I should just finish the comments there. I'd be interested to know if you think the excess supply is likely when it reaches all-time highs. Well, there you go, Shireen. Your thinking is matching my thinking. I think we're already in that zone where we're starting to be impacted by that supply. For Peter asking about CSL, we've done CSL at the start. If you didn't catch it on the replay. Anonymous also asking for XRF, which we've done. This is good. I like stuff I've done because it gets me to the bottom of my list. Reliance Corporation. I was very bearish on it, wasn't I? Last time. We might have looked at it just even here on these three black candles, which are just extremely bearish. And lo and behold, it's rallied from there. Thanks a lot, Linus. And I would, look, I drew it, didn't I? I covered myself by saying, hey, everyone, all I can do is call out on what I can see. And it could have literally the most amazing, rally from here. I don't know. I'll probably suggest going down. Hey, it's had a rally, but, it's compared to where it's come from, that rally is very small. It could get better. What you need to see is, the last few candles aren't bad at all. In fact, they're quite good. If it was to log some price action like this, okay, and I might actually flick this one over to the green color here because we want to think about it going up. And I'm going to literally draw it exactly there and then something like that, even like that. And let me draw some green zones where you might look for adding a little bit of risk. So in there and in there. Okay. Now the reason why I've drawn those, let me get rid of some of these other lines. I've got mucking things up. Here we go. So we go here, and I'm looking at that little peak trough in there. Okay. And what I didn't want to do is use that color. So let's go to here and here and here. And so that's a little peak trough in there. So you can see why I'm focusing on this level through here, going from a point of supply, to a point of demand, and same again there. Okay, so we want the market to tell us, all right? So that's a little pos. We need to see it act as a little pod. Okay, if this becomes a little pos, and it might not. I have no idea if this is going to become a pos, but this is the price action we want to see. And if we get the right candles, and we all know what the right candles look like, I drew them at the start of the session, the white candle with the lower shadow, or the white body lower shadow, or the full white candle in any of those green zones, then I could entertain it, and it is totally of this nature here. Where is it? It's gone now. There it is. Totally this, right? And this is all we're doing on Linus if it was to get its act together. Just dipping a toe in the water, because that could be just waiting underneath the surface there. So plus 1/3 if that occurs, and it's highly contingent. And let's continue to watch this one. I don't mind and see. But until then, because it's had a bit of a rally, I can go a hold. That will all change beneath here, and this is what hopefully you agree my sessions are about for right or wrong, making calls. I mean, how many talking heads out there go, oh, there's going to be volatility ahead? I think, so Frank, what do you think about the outlook for the rest of 2023? Well, there's going to be lots of volatility ahead and plenty of uncertainty. Well done, Frank. Tell me something I didn't know. Okay, I mean, this is why you pay me the big bucks. I get up here and I say, look, if it closes beneath 606, I think that's where you need to get out. So let's go less than 6.06 equals minus 1/3 or whatever you might still have on it. I won't do that one on the fundamentals. I just don't think it looks good enough. XRF very popular today. CSL, another couple of requests there. Aristocrat Leisure, let's head over there and fix up the scale and then fix up the zoom, and it looks fine. No issues there. You can see we've plus 1/3 it in the past. I wonder if that candle was amazing. I don't think you need to do anything else with it at this stage. So just happy to maintain the risk on this. Any reason to add more risk on it? No, I don't think so. It needs to deal with this point of supply. Until it does, then it's just a waiting game, isn't it? I don't think I want to see it close beneath that low. That low there, 36.98. It's starting to look a little bit shaky there. And assuming, of course, it does then put in a lower point of supply at yesterday's high. But yeah, just watch that 36.98 level as a key pressure point to the downside. Still a hold. That answers your question there, Helen. Thank you, Craig, for confirming the New Hope dividend. XRF LAU. There you go. It's very similar, isn't it, Peter? Well done. Now, look at this. We said minus 1/3 on this one because of the round number. That's okay. That would have kept you with plus 2/3 in the game. Do we need to do anything with those at this point in time? No, I don't think so. There's nothing so sinister in there compared this candle, even the last two candles, with XRF's candle, and there's really nothing to be concerned about. So we look at this, we look at this, we look at this, we look at this, and we're now up here. The price action is fantastic. It's not even pulling back. So 100%, this is a hold, whereas we talked about exits on XRF. So happy to hold. Obviously not a buy. You must say, hey, Carl, that looks amazing. Why would you buy it? It's just miles and miles away from a line. Where would I have bought it? I know this is purely hindsight. We didn't come up in these sessions on the particular date to allow me to call that. I would have loved to call it. But just so you know what I'm looking for, it's this candle here. This is the candle here. Okay, so that candle there is plus 1/3. Okay, every day of the week. And really what it does is it puts back in. So if you got out a third at $1, you're getting back in another third here. So let's say the high of the day, the close of the day, whatever that is, 102. Okay, so, you know, it cost you 2 cents. Who cares? You got out a third of $1, you got back in $1.02. Okay, that's fine. Just because you're getting out doesn't mean you're not still obliged then to get back in or add some more risk. Let me rephrase that. Just because you reduce some risk, because it hit a round number, it hit a target, doesn't mean you can't add some risk if it continues to exhibit the signs of excess demand. And that 100% continue to do that. RRL. Let's go to RRL. Ooh, okay, so I'm guessing, ladies and gentlemen, this is not a dividend. This was the pullback in the gold price. It does go to show just how hot these things were. Very frustrating. I didn't pick it. There's nothing in the chart on this day which would have said, hey, it's time to take some profits. It did get close to 250, but not sure how close it got, okay, whether it was close enough. So, yeah, didn't see this one coming at all, but we have to deal with it. This gap here and this candle are not good, okay? So this gap here, in combination with this candle, for me, it means minus 1/3. Start to manage the risk. And you're getting about where it closed yesterday, okay? If you wanted to say, well, I do think there'll be a bit more of a rally here. I'm just going to look. Let me just park that for a second. That minus 1/3, Carl. I see if I can get a little bit more for it, because I do think we might even get a little bit more of a rally. Okay, before we're going to get something that resembles this, all right, at some stage, and it's a guess, and I won't know until it happens. But it's my hunch that we're going to end up with something that might look a little bit like that, okay? And maybe you can see it in your mind's eye, what I'm seeing, just from experience and how many times something like that's occurred. There's our pod there. It's at or above the second from last pos. That's all good, okay? So that low there, 208, I reckon if you don't do the minus 1/3 today, just watch that 208 level. And I'm going to say close beneath 2.08 equals minus 1/3. Okay, if you haven't already. If you have, I would say it's you're exiting your second third of that stage. Okay, so it's annoying, it's frustrating. I know, tear your hair out, isn't it? If you didn't take your profits up there. That's market. Sometimes you don't get the memo. They don't give you the big ding, 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 ding. Hey, everyone, it's time to get out. Okay. Let's go to Barry. Barry has asked for the lithium sector review. Okay, so let's do that one. I might do a few. Barry's given me Pilbara, Sayona, IGO, and Core. And I might just, while I'm at it, start at the top and work through. And charts only here, we won't do any fundamental valuations. You can see we've been all over these. Very much minus 1/3. Any reason to add some risk on Argosy at this point in time? I did a spot on Ausbiz last week, and I said the way to find the bottom in lithium is you will see black candles. Look how many black candles there were when this started to break. Okay, you will see black candles turn to white candles. You'll see lower peaks and lower troughs turn to higher peaks and higher troughs. You'll see trends go from pink or orange to green. Not yet is what I would say. Not to say this couldn't be the best time to buy it between now and the next 100 years. I don't know, but all I can say is there isn't enough excess demand in the system just yet to warrant me dipping the toe in that shark-infested waters. Okay. I don't mind dipping a toe every now and then, but I need to see evidence that demand is coming back in. I'm not seeing it on Argosy. Buy, hold, or sell on that one. Look, I can squeak in at a hold. It's certainly not a buy. It hasn't been a buy for a couple of months now, but I can squeak in at a hold. It would become a sell on a close beneath that low there. So let me go, what's that? 30. That low there, 37.5. So let's go less than 0.375 equals minus 1/3. Okay. Let's go to Allkem AKE. Very, very popular. Aha. What did I say? Black candles become white candles. What did I say? Low peaks and low troughs become high peaks and high troughs. Trends start to turn. Okay, this is what I need to pay a little bit more attention to. It's starting to do the right stuff. Is there enough in there to buy it right now? Look, I'm very close. I'm very close, actually. If today's candle closes as strong as it is right now, I could almost do it. I think on the basis of what I'm seeing here in the price action, so you can see that this is a major pos now. We've got all sorts of price action there, and then moving back into a medium-term uptrend here, high peaks and high troughs through here. It stamps this out as if I said pos, I apologize. It's a major point of demand. This is a major point of demand here. It is the lowest point between a medium-term downtrend on that side and a medium-term uptrend on the other side. So this is important. We've got another pod here. That's only a pod, not an M pod. Okay, so we've got rising pods through here, and then this is our key pos here. I think this is the key pos, and close above that. The only problem here is this bit here is not that far away either, and I'm expecting some pos here. Look, 100% unequivocally, when we've been talking about this being a sell, light and risk for a long time, this is now upgraded to a hold, without a doubt. As long as it continues to trade, let me give you a level. As long as it trades above 1072, I think it's okay. And I would say less than 1072 equals minus 1/3, but above that, we're fine. So let's go through there. Plus 1/3, you can just feel me just grappling with it now. I'm not so sure. I think there's enough in it just from this long-term trend zone even. And then this point of supply and this point of supply to just go hold on this one and not yet to go plus 1/3, but I'm grappling with it. Starting to look half decent. Okay, another one which is looking half decent today is Core Lithium. Again, look at this. We're starting to see now the price action turn around. We were all black candles through here. Okay, now we're pretty much all white candles. Higher peaks and higher troughs. Great candle today. If it closes, I would say at $1 or better. Oh, now we're dealing with these points of supply, aren't we? 107. Could I take a cheeky little bit of risk there? I think for all the same reasons as Allkem, there's the long-term downtrend zone. 100% a hold. No issues at all being a holder. Okay. Where would you get out? I'd say beneath 79.5, you're okay. Beneath there, you really are turning around. Happy holder on Core Lithium. Look at this. Carl is changing his tune on lithium at the moment. Galan, I think I'm still a pass on that one. Okay, not terrible by any stretch of the imagination, because this is good here, and obviously beneath here you're out, right? No question. But I can go hold. Okay, starts to get below there, maybe starting to reduce risk again. Start to get above there, probably being impeded by this. Look, I could go hold. I'm not buying Galan at this stage. If I said Galan, I meant Global Lithium. That's GL1. Galan, misspoke, sorry, is next. Looking a bit more like Corp. Looks half decent. Would I be buying it? The answer is no. I don't think so. There's not enough in this one. But can certainly now, I'm changing my tune, going to a hold. Okay, we've been lightened for months now. Months. Go check the tapes. About 2-3 months ago, I said, have you just seen the top in lithium? The answer was yes. And now we're potentially moving back to more of a neutral stance. IGO. Price action starting to look good now. Could I add a cheeky little bit of risk on this one, plus 1/3? Oh, I don't see. Oh, the candles are so good. Let us see. So for all of these now, what we need to see is just dealing with, just building up maybe, and then dealing with that supply. And we may well get in the light green zone, which is going to appear on your screen. It might be after a little while that we get this, and then we're hoping to take the next move up to here. Okay. Happy holder on this one. I think it's starting to look very good. Look how those candles have turned around. Okay. If you were able to get in a bit earlier, and this is the key candle here, isn't it? If you were able to get a bit earlier to give yourself a bit of room until we get to the point of supply, that's where you could have gone plus 1/3. Okay. But given the candle I see now, I can go hold, not a buy just yet. Ioneer, passing, let's keep moving. Lake had a big pop yesterday. I said on the basis of that candle, happy to literally dip a toe in the water. Has the toe been removed after today? Maybe it has been a bit removed. Yeah, I thought yesterday's candle with the volume there and the I love it. With the volume there, I thought maybe it was time to add a third, and it's disappointing today. If it gets beneath that low, managed to call a cheeky plus 1/3, and that's all it was. It's a cheeky plus 1/3 on that candle, nothing else. Managed to call that on the only lithium stock which I think is down today. That low there, whilst we're above 48, we're okay on that one, on that idea. If you got my tweet yesterday and did something about that today. We're getting close on time here. Let me pick up the pace and go to LLL. Actually, a really decent rally here, but this is maybe doing what I'm concerned about on so many of the other stocks. We're hitting that long-term trend zone and getting pushed down again. Look, I don't mind this one if it pulls back to here and starts to throw in the right candles in the light green zone, then I could have another look at it, but so much needs to happen. So let us just let it happen and come back and look at it another time. Liontown, absolute happy holder. I think last time we talked about it, we said, 100% hold. It just looks amazing. Obviously, I know there's a takeover there, but there's no reason to sell at this stage. Even Mineral Resources, which, there you go, caught me out there with that last one. Maybe actually didn't. Never actually closed beneath that low there of 75.81. So, maybe still a third on that one. I don't mind this one. It's actually doing all the right things. I'm not averse to adding a third here. Not averse to adding a third here. Okay? Not averse. Maybe you can sense in my voice a little bit of trepidation. I just don't think it looks as good as IGO and some of the other ones. It's frustrating that didn't, hasn't gone down as much. And there's plenty of price action in there. Look, let's hold 100%. No issues about that now. So we're not lightening the risk on that one. We're looking for opportunities to get back in. Could you go plus 1/3? If it closes, let me say, if it closes at or above that high there, so 82.52 or better, then plus 1/3. Okay, so 82.52 or better, then plus 1/3 on that one. And let's go to PLS, Pilbara, which is doing the same sort of thing. 405, key pressure point here. I think if we close above 0.05, so let's go plus or greater than 4.05 for me equals plus 1/3. Again, just dipping a toe in the water on this and nothing more than that, because toes are vulnerable at the moment. I think on lithium, Sayona, probably the least impressive, I think, of some of those turnaround opportunities we're seeing. I can see still just a lack of interest more than anything. And I know it gets lots of press, it gets lots of social media, but that interest in terms of noise in social media is not translating into noise equals buying, equals demand, equals lack of supply to facilitate the price to go up. I can certainly go a hold there. Beneath 18, I'm concerned. Okay, that is the end of the list for the Zoomers. And I'm just going to do a couple that have come through the chats here. RSG, I expect it got tagged yesterday. In fact, not anywhere near as bad as RRL. Is this the species-ending event? I don't think it's as bad, anywhere near as bad as RRL. And given it's starting to show a bit of demand here today at the old point of supply, I think we're fine on here. So I'm going to go hold. Just watch out though. If it starts to trade beneath, and I'll give you a level here, that low there. So that low there's say 43.5. So under 43.5. I think, you can go minus, so 0.43, yes, equals minus 1/3. And just to maybe take a little bit of profit off the table, but 100,000 million% still hanging on to the other 2/3 on the basis that everything else is still more than hunky-dory on this one. And if you have any feedback, we need help setting up account, contact Nick. Nick is saying you can download my bear market survival guide. I think he's also saying Carl's running multiple webinars. EQR looks great. No issues here. Happy holder. Would I buy it? Look, I don't mind. It's just there's just a lot of supply. There's a lot of supply in this zone. So let's just go happy holder here. Happy holder. Not a buyer. Today is the 18/4, just so I know what I said last time. And RRL had an operational update. That's the reason for that big decline. Isn't that just so like gold stocks? Okay, they finally get a bid on the basis that gold had to almost hit a new high, short covering whatever, and then they come out with their operational updates, which are still lousy. CXO did have a resource update today. I did see that at their 62% increase in reserves at their Finniss project. But yeah, a little bit of a pop there. Leo Lithium for Marco. I've done that one. It looked actually very impressive, but maybe that long-term downtrend is going to be an issue. Okay, Zoomers are all done. Let's head over to the streamers. And KRM for Glenn. I think it's okay, Glenn. Look, a bunch of white candles, but you can just see by the sketchiness of the candles, the overlappiness of the candles, if that's a word. You can see it's an extremely illiquid stock, and volume almost non-existent there. So look, if you've got it, I can see a path to holding it. Is there enough interest in here to get me to buy it? Look, not at this stage. Give me a big white candle closing above this high here. So a big white candle closing above 6.9, so 6.7 or better, with a nice big white candle, then I could actually add some risk. So let's go plus, okay, close 6.7 cents, you know what I mean, 0.67 plus big white candle equals plus 1/3 if I'm not around. And let's go to TLX, which looks amazing, not TLS, which actually looks okay, not amazing. This is one of the best charts out there today, but unfortunately, look at that. It's just smacking up against this big point of supply here. The question is whether that point of supply is going to be a problem. So far in this candle, we're just starting to see a little bit of supply creep in there. No surprise. Look, happy to hold it. This is 100% a hold. I don't think you need to even take a third at that old point of supply. Not fussed about it. Just not a buy because of the proximity of this, and that's all it is. So once we deal with this, and this will be like a Neuren, hopefully, which I'll go to next actually, and we see a little bit of a pullback, a little bit of supply manifest itself in the system. We work through that supply. I think the next move up is going to be massive. So 100% hold, and hopefully we'll see some even better things there. And then Neuren, of course, which is breaking out today. And you can see what happens when things go up and they don't go down. It is just the epitome. It is the epitome. Epitome, is that how you spell it? Of demand, okay, at this level. And yes, I certainly continue to hold that one. No complaints there. We shall do CHC as I run into the close here. I can hold it on the basis of you've got a bunch of white candles coming in, which is very impressive. And as long as it does not trade back beneath this low here, then you can continue to hold it. But if it was to close beneath that low there, and I'll give you the number, if it closes beneath 1065, then I can see no reason to own it. I can't buy it because it still needs to do the right price action, high peaks, high troughs, etc., etc. But at least it's got itself back up to a hold. Harvey Norman, I cannot say that about Harvey Norman. This thing looks pretty darn awful, and if it actually looks like it's pretty close to just breaking down completely. And if we zoom to normal range here, yeah, you can see there, this is the last bastion of demand, and if it cracks that, it's going to be all over Red Rover. Buy, hold, or sell? No, I can't see a path to holding this at all. I'd rather be out of it. Could I buy it? Well, see previous comments. If I wouldn't own it, then I'm certainly not going to buy it. MVP, ditto on that one. That is probably the worst chart we've seen today, and I totally concede that it could be as soon as tomorrow that somebody comes in and makes a takeover bid for this company that pushes its price up to $5. And whoever asked me this question says, see, Carl, I told you so. I knew this was the one. I knew this was the stock to own above all stocks. It's absolutely possible, but I would say it's not probable. It's not likely. Buy, hold, or sell on that one. I have to say sell, based upon the fact that it is not really loved by the market at all. And, oh, this is a huge list here, but mostly people talking to themselves. And last one is GNC for the day, and I have then got to the bottom of the list. And how interesting is it? The last few we look at are all very, very similar. I wonder if that's something to do with the fact that they've all come off the streaming services where, I don't know, maybe the Zoomers have hung around with me longer, and they are starting themselves to identify charts with prospect. And therefore, we end up looking at those. And the streamers, not to say anything ill of the streamers, maybe the streamers are fairly new in this process and are still looking at these sorts of charts and wondering, oh, should I hold on, Carl? There's nothing in that chart which tells me that, forget what I think, but think about those big brokers, think about the research houses that are buying and selling. Their buying and selling makes the market. Your buying and selling is irrelevant. Are they falling over themselves to get in? What did I say? Black candles, lower peaks, lower troughs, pink on the trends. Until those things go 180 degrees the other way, white candles, high peaks, high troughs, trends turn green. There's no reason to look at this. I think this is setting up for another drop, and if it does close beneath this level here, 668, it could drop very quickly indeed. Buy, hold, or sell. I can't see a path to holding this one, so I'm going to go sell. Okay, that is it for the day, everybody. I managed to get everybody's requests done, so a big sigh of relief at my end. Look, I won't be here next Tuesday, unfortunately, because it's Anzac Day, but I'm sure you'll have a wonderful day, as will I. Obviously, thinking about the importance of the day and spending some time with our families in respectful contemplation. But I'll be back the Tuesday after that. If you want to catch me before then Thursday I'll be back for the commodities, indices, forex, crypto, the big macro stuff, and then on Friday we will do our USA edition. Head to thinkmarkets.com/AU webinars to register. If you're not a client of ThinkMarkets, well, you should be, because we are the good guys in the Australian broking scene. We have all of the products you need to trade, including good old-fashioned shares, $8 flat rate, CHESS and HIN sponsored. There are cheaper rates out there. In fact, I've even seen commission-free. How about that? But you won't get that CHESS sponsorship. It's important that your shares are yours. They're not being pulled with a bunch of other people. Plus, you will find that whilst you may be getting commission-free or lower commissions, you're getting clipped every time you do something. On the way in, you're getting charged a couple of % to deposit money. On the way out, you're getting charged a couple of % and fees as well. We don't have any deposit fees or exit fees with any of our accounts, and you can trade commission free on all of those key indices, commodities, crypto, etc., and shares with our CFD product. Award-winning broker, easy-to-use multi-asset platform, and most importantly, the best customer service in the business. You can find our phone number, you can call us, you can speak to people like Nick, like Khan, who will get your problem sorted quick, smart. If you're watching on any of those streaming services, please hit the subscribe button to stay notified of any of my future updates, and hit the thumbs up button to let me know you like what I'm doing so I continue to do more of it. It's been a pleasure chatting with you today. All the best for your trading. Until we catch up again, bye-bye for now. But before you go, don't forget that everything we've discussed today is general in nature. It has not taken into account your personal financial circumstances or particular needs. So before acting upon any of that general advice, you should consider it carefully or seek the help of a financial professional. You can learn everything you need to know about ThinkMarkets and our products by heading to the website and downloading our product disclosure statement. Bye-bye.